In a lot of cases, we're seeing rates lower on the DSCR than that 10% down conventional loan. So yeah, it's turned into a really good opportunity for people because, the frustration that I would get from self-employed people, which are typically the clients who are going to take advantage of that product, because on a tax return, they they're going to write off as much as they possibly can, and that's on a conventional loan. That's what's being used to show income. So not strong from that standpoint. But on the DSCR loan, we're not using personal income to qualify you. So that DSCR becomes a good outlet. But those business owners, self-employed people felt like they were getting kind of, the raw end of the deal, because it's, gosh, I've got to put more down and then I'm getting a higher interest rate. And some of them are used to that. Some of them are used to business loans, commercial loans, where there's different terms. It's not always a 30-year fixed rate. It's a balloon rate. They're paying a higher rate. So some of them are used to that, but it still doesn't taste, it's not palatable. It doesn't leave a good taste in your mouth. So that script has kind of flipped now to where they're getting some of these better opportunities from a rate standpoint.
Yeah, it's really interesting how that has changed. Is now, originally being kind of a secondary option if you didn't qualify or you couldn't make the traditional financing work, you would roll to the DSCR to get the deal done.